Hi everyone, this is Cole Christian at PWM, and we want to welcome you to the next installment of the PWM Market Minute. Now, as a quick refresher, the Market Minute is designed to give you actionable insights into markets, investment topics, portfolio management, things worth thinking about at PWM, and provide that to you in a matter of minutes. So not much time to waste, let's get after it and hop right in. If you've worked with us for a period of time, or been on our latest market call, or had a one-on-one meeting with your PWM advisor, you've probably heard us say things like, we don't time markets. We don't really play that game. And the reason is, it's really founded on two tenets. Number one, it's impossible to predict the future. We can have guesses, we can look at history, we can have probabilities and models built out, but at the end of the day, it is impossible to predict the future with certainty. And number two, even if we could predict the future, it's not guaranteed that we could predict what the market would do. And so with that said, for today's exercise, let's pretend that that first tenet is not true and that we can, in fact, predict the future. Would we then be able to take that knowledge and monetize our knowledge of the future in such a fashion that would benefit us moving forward? So what I want you to do is we're going to have a little bit of a suspension of reality. We're going to hop in our time machine, and I'm going to take you back to a few different dates. We're going to pretend that we don't know what happens, even though we're sitting here with the answer key. But we're going to think through, how would a rational investor take a certain fact set of guaranteed certainty in the future and monetize that information within the market? And so the first example, probably not a surprise, but to give you an illustration, I think everyone will resonate with this one. Taking us back to January 1st of 2020. Again, we've hopped into our time machine and we know for certainty, with certainty, that there's going to be a global pandemic coming. It's going to shut down the US economy. There's going to be shelter-in-place orders. Some people will think it's the end of the world. Knowing that with certainty, what would the rational investor do? Well, I would say the rational investor would most likely fly to safety. Right? If the US economy is going to come to a screeching halt, I don't want to be invested in companies. I want to be invested in safety, guaranteed pieces, right? Knowing that fact set with certainty, there will be a global pandemic that's going to shut things down, does not yell, hop into the stock market. And so if you knew that with certainty, if you knew for a fact that that was going to happen, you probably would have hedged your portfolio. And unfortunately, what would have happened is you would have missed out on one of the sharpest recoveries. There's that V-shaped recovery we heard of, one of the sharpest market recoveries in history. Is that rational? Did that make sense? If I told you that back then, that look, there's going to be a global pandemic, but guess what? The market's going to rally. You would have looked at me as always crazy. It's really hard to monetize how the market will react. That might be an extreme example, so let's keep our time frame somewhat similar here, and we'll go back to the pandemic. It's January 1st, 2020. I also tell you, hey, guess what? Not only is there going to be a global pandemic, but people are going to be forced to work from home for the foreseeable future. But luckily, hey, there's an app for that. I know of a company that's about to rocket ship to the top because their product is designed for this work from home dilemma. Of course, that company is called Zoom. Let's say we bought Zoom stock on January 1st of 2020. Well, we felt like geniuses really throughout that year. But as we can see, knowing with 100% certainty that that was going to happen, look at that performance from Zoom since then. It's come back down to earth. So again, you may have bought that stock. Perhaps people on this call or who are watching this video owned Zoom. When are you going to sell? Could you then predict the future on when it was going to go down? You may have bought Zoom. You got one half of the equation correct. Did you get the other half of the equation of when to sell? Knowing with certainty that Zoom was going to shoot up, in our example, our time machine example here, was not a guarantee that you all of a sudden would be profiting and sitting on an island right now. As you can see, the market reacts quickly. It's incredibly efficient, and it's really difficult to know how the market will react. It's not exactly what we would call rational at times, but that doesn't mean it's not efficient. And lastly, a more recent example. Maybe those feel extreme, the pandemic, right? That was a very extreme scenario. So let's take this one. It's January 1st, 2022, and I tell you with 100% certainty that inflation is running too hot and the Fed is going to raise rates at the highest rate they've ever done so in history, with the sole intention of slowing down the US economy, with the sole intention of bringing things to a halt so that prices can come down and inflation can cool a little bit. Now, with that fact set, you're probably not saying this is a great time to be in equities. We saw that in 2022. As rates continued to rise, the stock market took a bit of a hit. And for some people, in August, September of 2022, they were still really, really worried about the future outlook, getting into cash, getting into 5-year type CDs, guaranteeing I'll be okay for that time frame. In this example, if we knew for a fact that that was going to happen, maybe we could lap the field by getting out of the stock market, hedging our bets, buying equity puts, buying things that are going to benefit when the stock market goes down. And if you did that, if you hopped into cash, if you knew for certainty that that was going to happen, what you're seeing here is a graph of the stock market in 2023. So again, you probably missed out. Does it seem rational that the Fed would come out and try to bring the economy to a screeching halt and the stock market would rally, as of yesterday's close, 15, almost 16% in 2023 while they're still raising rates? Is that rational? No. But it illustrates this, and this is the main takeaway of this exercise. Even if we knew the future, the stock market is not a linear puzzle. It's not a linear machine. The stock market does not operate under the rules of if A happens, then B must happen. The stock market's an incredibly dynamic machine, processing trillions of transactions daily. With that in mind, it's a multivariable puzzle. Knowing the future with certainty does not guarantee that we can take a portfolio and monetize it. And so with that said, what is the right course of action? Well, as we constantly preach here, it's having a long-term view. One theme that ran through these examples is they were short-term in nature. A year feels long, yes, but if we zoom out to 10, 20, 30 years, these instances were just blips on the radar. And so by having a disciplined approach, understanding we are invested for the long term with an allocation that we can stomach, that's what we do at PWM, is making sure your risk level of your portfolio is something that you can actually handle when these short-term blips occur. That's a much more prudent strategy than sitting trying to predict the future and or predict what the stock market will do. I hope this has illustrated that that is a very difficult, if not impossible, way to approach a positive investment experience. So with that in mind, we're going to wrap this up. I hope this was helpful. If you have questions, as usual, please reach out to us. You can reach out to us at our email. That is info@pwmplanning.com. More of these to come. We're really excited to share more frequent investment topics and information with you. Until then, from us at PWM, we hope you have a great rest of the week. Take care.